Can fiat money be replaced by cryptocurrency? Since their mainstream introduction in 2009, cryptocurrencies have grown rapidly in value, utility, and popularity. Many retailers and merchants accept them, and investors are looking at them as a possible way to earn returns and store value. Governments are attempting to determine how to tax and regulate them. With so much emphasis on digital assets, cryptocurrency, and the merging of retails, one of the many substantive discussions is that of cryptocurrency replacing fiat currency. Discover what is driving these debates and how this shift may affect the economies in which it occurs. Cryptocurrency address fiat currency issues. Money is defined by many agencies and regulators as anything that is widely accepted as a means of exchange, a store of value, and a unit of account. For more than a millennium, fiat currency, also known as real or physical money, has meant all three requirements. However, progress has already begun to reduce the need for physical currency in the majority of developed countries. Debit cards and electronic transfers are gradually replacing physical money, resulting in a system in which governments, banks, businesses, and individual transfer funds by having a third party change numbers on the electronic equivalent of a ledger. Third parties are required to ensure the validity of transactions, and the costs of maintaining these financial systems are high. These third party imposes a requirement that you entrust someone else with your money. This trust has been violated numerous times, with unethical practices by third parties contributing to global financial crisis. Cryptocurrency eliminates the need for a third party to verify transactions and ensures accuracy. Because blockchain technology and automated consensus mechanism verify transactions and store information in an unalterable manner, each party is correctly credited or debited. What would happen if cryptocurrency replaces fiat? In their current form, cryptocurrencies cross borders and regulations, which has both positive and negative consequences. They are not influenced or controlled by central banks in the same way that fiat currencies are in developed countries. Central banks use interest rates and open market operations as monetary policy tools to influence inflation and employment. One of the fundamental principles underlying cryptocurrencies is decentralization, which eliminates these tools. The effect of a complete replacement of fiat currency are still being researched and evaluated. The change could have significant negative consequences for economic and financial stability, or it could usher in a new era of complete global stability. Due to price volatility, the International Monetary Fund, IMF, advises against using cryptocurrency as a primary national currency in its current state. Furthermore, the organization believes that the risk of macroeconomic stability and the lack of consumer protections must be addressed. Cryptocurrency has enormous potential and is clearly advantageous as a currency. For example, after fleeing the Russian invasion in 2022, many Ukrainians turned to cryptocurrency. Many people would not have been able to survive without cryptocurrency. Many people in countries with severe fiat deviation use it to keep their savings, send remittances, and conduct business. What will the currency of the future look like? Through exchanges or trades with a cryptocurrency users, you can already exchange cryptocurrency for fiat. The popularity, understanding, and acceptance of cryptocurrency and blockchain continue to grow. The greater its understanding and use, the greater its potential value as a medium of exchange. And these trends continue. A variety of currency scenarios may emerge. First, a society and economy would embrace cryptocurrency to the point where it replaces the country's fiat currency. Its government would be forced to accept it as legal tender, and fiat money would be phased out. Another possibility is hybrid of digital assets and fiat currency. Both could be recognized by governments, allowing them to collect taxes and fund their programs and militaries. Consumers and business could select whichever option they preferred. Third, a society may reject cryptocurrency entirely and continue to use its existing fiat currency. However, this appears unlikely because blockchain advancements are guiding society towards a system in which financial information cannot be altered or faked. Whatever scenario unfolds, it is clear that cryptocurrency can benefit people all over the world, as well as the economies that surround them. Key takeaways: fiat currency has been tried and tested as a trustworthy medium of exchange, with tools developed by central banks and governments to aid in its regulation and impact on the economy. Academics, policymakers, investors, and consumers are still exploring and researching the roles that cryptocurrency will play. What would happen to global or regional financial stability if cryptocurrency replaced fiat currency is unknown.